Good morning. And today we're going to focus on gold, which has taken a brutal hit, more than 5% decline of highs at 4,550 down to 4,300. Um, well, profit taking has sent prices plunging on Monday. And today, of course, is Tuesday, is December 30. Not much more trading to be done, to be fair. And we are now bouncing towards the 4,380. Perhaps even we can go higher. I would be looking at the Fibonacci levels, okay, on the 4 hour. And let me just go a little bit further back out here to have a better view. The 50% lies at 4,430, let's say. The 61.8, 4,460. 30.2 at 4,300. Actually, let's call it 404, 4,400 round. The question now in my mind, okay, in another trader's mind, is this a dead cat bounce or have we bottomed out? Well, let's break down the technical structure and the fundamental drivers behind. First, fundamentals, the sharp move lower is primarily driven by profit taking. Okay. We see like an extraordinary rally around 70% in 2027, 2025, sorry. And even just the past few days, we saw gold as well as silver, like extending um, quite a lot to the upside as thin liquidity, of course, allowed um, bulls to drive the markets higher much easier with less um, leverage, let's say, or with less capital. Okay, but this is a classic risk of behavior in a thin market. Okay, once sellers took control, there weren't enough buyers to absorb the wave of profit taking. So here's where we are today. However, analysts do caution against overinterpreting this move. The underlying fundamentals, like the Fed rate cuts, persistence of buying, and geopolitical uncertainty remain intact. Okay, on the chart, we have had this sharp drop on Friday. This is a violent move, and typically, okay, bounces to the 38 to 61.8 zone are seen as potential bounces, dead cat bounces before another leg down. Now, there is a few things we need to pay attention to, obviously, because if we stop at 38.2, then the chances of another leg down are going to increase. The target also changes. In using the Fibonacci extension, we have to um, look at the 100 Fibonacci, right? The 100 Fibonacci, for example, for the 38.2 resistance comes down to 4,150, and the 61.8 also is a profit partial take profit level. Okay, obviously on the 50 these change, they go slightly higher, like $30, and on the 61.8 the same thing happens, like $30 higher. Okay, so you see though that there is on the 61.8 and the previous bottom is 61.8 also here. We have these particular price action. Now, um, dead cut bounces typically do not have deep pullbacks, right? So if we do 13.2 or 50, then most likely to go lower. If we do 16.8, it just simply might not be a dead cut bounce. Okay, so our focus should not like be any different from having another leg down. However, there's going to be less chances of moving lower. The 78.6 potentially could be a triangle triangle move, or just a consolidation. And obviously, if we go up to a double top, there could be a V-shaped recovery. We break to higher levels if we break after initial rejection, or we might see a flat forming. Okay, but anyway, the pullback depth is going to be very, very, very important. This is all I'm saying. Now, let me just tell you about the RSI a little bit, okay? On the 4 hour, we see this sharp move. We went from, after a divergence from the peak and from overbought to oversold in one go, okay? This is how we know this is a steep move, right? And now we see prices we see momentum bouncing along with prices. So typically what happens is we see the 50 RSI holding, okay? And a reset follows further downside moves. So what we do have to watch here is how high does the momentum go? Are we stopping at 50, or can we perhaps go up to 70? 70, sorry, 60. 60 will probably mean we're going to do the 61.8. It's a deep retracement. And deep retracements have less chances of, continuing lower down. So in my mind, okay, as long as we are below the 50, this is a sell the rallies opportunity rather than anything else. But I'm only looking for another leg down. Okay, and this leg down could go back to 4,150 or so for now. Now, for a bullish reversal, even after that next leg down, okay, because we're still in a bullish market, don't forget that, guys, the main trade is up. The main trend is up. So until we see some sort of hidden bullish divergence on the RSI, for example, imagine something like this, okay? And prices will do something like that. So we'll be getting a divergence over here. This is the exact momentum scenario we want to see to start getting back into buy. But as I said, for me, I am cautiously bearish now until proven otherwise. I will be looking to sell the rallies, and I think the 38.2 with 4,150 or so as the I would say not final target 160, let's say 177. That works fine, and we have the 61.8 as a or the 78.6 even. It allows us, we have that room. Okay, this would be for me the trade. So I'll be looking for an entry at 4,400 down to take profit at 4,170 or 80, and a stop loss above the 78.6 at 4,500, let's call it. Okay, so good luck, trade safe, and we'll speak again next year. Happy New Year, everyone.